let's now look at a bullish godly example. We first want to find higher time frame key levels of support. Looking at a daily chart, you can see we've had a nice move to the upside. We then started to retrace. So if we draw a Fibonacci tool from the low up to the high, we're looking for some confluence, and you can see around this area right here, you see the area of support becoming resistance. So if we take that horizontal line, just drag it from the top down to the bottom, you see this area right here, 70.7 Fibonacci retracement, lining up with this area here. Again, reference that last bearish candle before price explodes to the upside. So that base right there, that's the most important reference point in terms of the support resistance on this last leg up. So we've got a nice bit of confidence. Remember, these are zones. Okay, so you can see on the daily, although it's about 35-40 pips apart, they are zones, and we're looking for patterns to actually confirm that that area or zone is holding. So we now move to the smaller time frames, and I'm just going to move to the 15-minute chart. You can see we have price drop off and then hits this key level, and it starts to rally. So once it starts to rally and retrace, you want to start looking for possible patterns. So if we draw Fibonacci from the from the low to the high, you can see price retraces and it just pops through that 62 level. So we could start to think about the possibility of a godly pattern setting up. So if we just trace this in, we've got a swing up which is labeled X to A. We then retrace in point B, and once we get this retracement, it starts to retrace on this move up. Draw your tool from the high to the low, and you're looking for confluence. Now that's 79,127 extension area, about 6 pips apart. Okay, you're not going to get the exact sort of textbook look-alike in the market, so you need to be able to give it a bit of leeway in terms of looking for, you know, that perfect setup. The price starts to retrace on us now, so we have this rally up, X, A, B, C, and now what we're looking for is we're looking for a buying opportunity around, I'm just going to move this level up, the 79 area, and you can see around the 34.41, nice little base in here as well. You see this last little blue candle before price moves to the upside. So I want to highlight this area right here. And remember, our stop loss is going to go below the low. So you're going to look at about, give or take, 25 pips, somewhere around there. And target, we'll just shoot for the highs here. So look at about 25 plus for about 67, somewhere around there. So we're looking for a move to the downside. And that's essentially a bullish godly for us. So if we go to our orders, pending orders, new pending order, and we want a buy limit, and if we just put this in 34, and I'm going to add the spread, so we'll put 43 plus 1 with a stop loss below. So I'm just going to go around 30 and see where that goes. We can move it up a little bit. So okay, so 34.16, and a target we're going to go for around this 35.10 area. Just sort of select 70 and see where we go. So around about this high here where that 886 retracement is. So we place that in the market. Here again, set your alert. So if prices hit the level and you're not at your desk or you're doing something else, it alerts you to what's happening. And if we just follow this through, you can see we get spiked into the level. Look at the immediate reaction. If you just look at your open orders, really 14 pips up on the trade. Okay, so it's very important to have those limits waiting in the market. Now you just need to be patient and wait and see what happens. So about 40 pips. Now depending on how you manage this, you could reduce risk on the trade or get to break even, or you could just leave the trade open and shoot for take profits or take partials. There's so many different ways of doing it. I'm just going to leave it really simple for now and leave the stop where it is. and look for that target. Okay, so you have bullish Gartley here, and we're now starting to move to the upside. So we've just been taken out. Nice little pop up there, and if we have a look at the account, we can see we made 66 pips on that trade. So we just recap that. From the daily chart, we found the key level of support, higher time frame support, 70.7 Fibonacci retracement, with a nice base of support becoming resistance, back to support, and then on that 15-minute chart, we had a nice bullish Gartley form, enter with a limit order, target was up towards the high. You can see price moved a little bit further from there. Hope you found that helpful.